The technology you're hoping to ignore is already rewriting your profession. Not in 10 years, right now. It's catching tax fraud. It's reading financial statements. It's reconciling the books while you sleep. The accountants who understand it are about to pull away from the ones who don't. And the gap is widening every month. In the next few minutes, or in the next few videos, I should say, you'll see exactly where AI is already changing the work and how to stay ahead of it. Let's get into it. The same AI you're nervous about is already working for the IRS. Think about that for a sec. In a New York Times article titled, "IRS Deploys Artificial Intelligence to Catch Tax Evasion," the agency said it had started using AI to investigate tax evasion at multi-billion-dollar partnerships. We're talking huge hedge funds, private equity, real estate investors, and large law firms. In a single wave, the IRS opened examinations of 75 of the largest partnerships in the country. On average, each one holds more than $10 billion in assets. The machines are reading returns and flagging risk faster than any human team could. So here's the uncomfortable question. If the IRS is using AI to find problems in returns, are you using it to catch them before you send them to the IRS? Think about that in your own practice. Are you ahead of this technology or about to be caught off guard by it? Most people think AI and automation are the same thing. They're not. And the difference matters more than you'd guess. Automation follows rules you write. If this, then that. It's perfect for repetitive, predictable tasks, like moving data from one box to another, but it can't think. AI is different. It learns from data, spots patterns, and makes decisions you never explicitly programmed. One follows instructions, the other figures things out. So when a vendor says their product is AI powered, ask one simple question. Does it actually learn and adapt, or is it just following a script? Think about the tools you already use. How many are truly AI and how many are automation wearing an AI label? A computer learns a lot like a child does. Here's the simplest way to picture it. Show a child enough pictures of cats and dogs, and eventually they can tell them apart on their own. That's supervised learning. You give the machine labeled examples and it learns the pattern. Now hand someone a pile of puzzle pieces with no picture on the box. They group what looks similar. They group what looks similar. That's unsupervised learning, finding hidden structure with no labels at all. And training a pet with treats for good behavior, that's reinforcement learning. 3 ways to learn, one big idea. The machine improves from experience, not from rules you wrote. Think about a task in your firm. Which kind of learning would actually fit it? AI doesn't invent bias. It inherits it from us. And that should make every accountant cautious. Train a loan model on years of data where men were approved more often than equally qualified women, and the model learns to do the same. The bias doesn't disappear, it just scales. Even the biggest companies get burned. In 2024, Google's Gemini image tool went so wrong, the company temporarily paused image generation of people in Gemini while we work on an improved version. By their own accounts, the problems led the model to overcompensate in some cases and be over-conservative in others, leading to images that were embarrassing and wrong. The lesson for us is simple. AI can look authoritative and still be quite unfair. Think about a tool you rely on. Do you actually know what data taught it? Your AI can give you an answer and not be able to explain why. That's the black box problem. Deep learning models pass data through layer after layer until an answer pops out the other side. Even the people who built them can't always trace how they got there. For most apps, that's fine. For financial reporting and audit decisions, that's a problem. If you can't explain how the number was reached, how do you defend it? How do you trust it? That's why transparency isn't nice to have. It's a professional requirement. Before you rely on an AI tool, ask how it reaches its conclusions. Think about your last AI-assisted decision. Could you explain it to a regulator? Could you explain it on a witness stand in a courtroom? Me personally, I don't trust AI. It just makes too many mistakes. Feed your AI bad data and it will hand you bad answers with total confidence. That's the part that catches people off guard. AI doesn't sanity check your numbers the way a skeptical human would. It trusts what you give it. Missing values, duplicate entries, inconsistent formats. The model learns from all of it. And the cleaner looking the output, the more dangerous the hidden error becomes. There's a reason for the saying, garbage in, garbage out, never goes away. Your insights are only as good as the data underneath them. So before you trust the output, scrutinize the input. Think about your own data. Would you stake a client decision on how clean it really is? Imagine never hand keying a receipt again. It's not a someday promise, that's here today. Picture a client who drops off a shoebox stuffed with years of paper receipts and bank statements. The old way, someone keys every line in by hand. Slow, tedious, full of typos and errors. With AI and optical character recognition, the software scans each document, pulls the vendor date and amount, and categorizes it in minutes. The error-prone busy work disappears. And the time you get back goes to the work clients actually pay you for. The $500 work instead of the $50 work. For analysis, advance, and other things. The technology isn't replacing the accountant. It's freeing the accountant. Think about your week. How many hours are still lost to data entry a machine could do? The fraud that slips past humans often hides in plain sight. AI is very good at finding that. Picture a bank watching millions of transactions a day. One account suddenly fires off several large withdrawals in a short window, then wires the money overseas to high-risk regions. A human reviewer might never connect the dots in time. An AI anomaly detection system flags it instantly because it knows what normal looks like for that customer. It doesn't get tired, doesn't take a break, doesn't go to sleep, it doesn't skim. It compares every transaction against the pattern and raises its hand the moment something breaks. That's a second set of eyes that never blinks. Think about your controls. What would catch the one transaction that doesn't fit? One weak link in your data security can expose millions of people. History has proven it again and again. In the Equifax breach, attackers reached the sensitive financial information of over 147 million customers. Cambridge Analytica harvested the personal data of millions of Facebook users without consent. The Yahoo breach touched, depending on how you look at it, millions of accounts. Now think about an accounting firm, whatever the accounting firm holds. Social security numbers, bank details, entire financial lives. As you adopt AI tools that feed on all that data, every new connection is a new door or back door. Some of those doors get left unlocked. Security can't be an afterthought bolted on at the end. Think about your firm. If a breach happened today, would you even know it? The biggest threat to your data isn't a hacker. It's a well-meaning employee. It's hard to hear, but the pattern holds. Most breaches trace back to human error, not sophisticated attacks. One staffer clicks a convincing phishing email, hands over a password, and the whole system is exposed. You can buy the best firewalls money can offer and still get beaten by one bad click. That's why training is the real front line. Teach people to spot the bait and the turn on multi-factor authentication, so a stolen password isn't enough. Technology protects the doors. People decide whether to open them. Think about your team. When did they last get real training on spotting a phishing attempt? Forget the jargon. Blockchain is just a notebook nobody can secretly edit. Here's the picture that finally makes it click. Imagine a giant shared notebook copied across thousands of computers. When someone writes a new entry, everyone's copy updates. And once it's written, no one can tear out that page and quietly change it. That permanence is the whole point. For accountants, it means a tamper-proof trail of every transaction. It even powers smart contacts, agreements that pay out automatically the moment the terms are met, with no middleman. Less reconciliation, more trust. It won't replace your judgment, but it may change what you have to verify. Think about all your audit work. How much of it exists just to confirm records weren't altered? Imagine an employee who reconciles accounts all night and never makes a typo. That's robotic process automation, and it's already on the job. RPA is software built to mimic the clicks and keystrokes a person makes. It logs in, pulls data, matches transactions, and flags the ones that don't line up. It works around the clock. No breaks, no fatigue, no Monday morning. On routine, rule-based tasks, it's faster and more accurate than any human. But here's the catch. RPA only follows the rules you give it, so a messy or poorly defined process just breaks faster. Automate a clean process, not a broken one, so make sure it works first. Think about your workflows. Which repetitive task would you hand to a tireless bot first? The fastest way to fail with AI is to roll it out everywhere at once. Here's a cautionary tale. One firm bought an AI tool to manage its investment portfolios and pushed it live across the whole book of business overnight. No test run. The tool misjudged risk, the portfolio suffered, and clients lost confidence. Staff who were never trained didn't trust it, and the whole thing got scrapped. A small pilot first would have exposed every one of those problems cheaply. Test it on one process, learn what breaks, then scale what works. Big bang launches feel bold, but they bury your mistakes inside the whole operation. Think about your next tech rollout. Are you testing it or just hoping? ChatGPT gives vague answers because people ask vague questions. The quality of what you get out depends on what you put in. Ask me, say, tell me about taxes, and you'll get a useless wall of generic text. Instead, get specific. Name the scenario, the type of tax, the jurisdiction, and exactly what you need. Try instead, explain the tax implications of a business expanding into a new state, including sales tax nexus and registration requirements for Florida. Now the answer is actually usable. But here's a rule you can't skip. Whatever it gives you, verify it against authoritative sources before it ever reaches a client. It's a starting point. It's not the final solution or the final answer. Think about how you prompt. Are you asking sharp questions or vague ones? AI won't replace accountants, but it will replace the parts on the job nobody loves. Let's be honest about what's actually at risk. Repetitive, rules-based work, data entry, basic reconciliations, routine bookkeeping, that's what gets automated. What doesn't? Judgment, interpreting the numbers, advising a worried client, answering their phone call. AI may do it, but it won't do it the way you would. Knowing what rules really mean. A machine can flag an anomaly, but it can't sit across the table and earn trust. The World Economic Forum even noted that the highest job growth through 2027 is hands-on trades, not desk work a machine can copy. The accountants who thrive won't be the ones who resist AI. They'll be the ones who let it handle the grunt work. Think about your role. Which parts are truly yours and which parts you'd gladly hand off? The biggest change AI brings won't be in your software. It'll be in the pace of everything. And that's a striking prediction. In a piece of the future of AI, analyst Michael Bennett wrote that human life will speed up. Behaviors will change and industries will be transformed. And that's what can predicted with certainty. Think about what that means for your clients. Decisions that used to take weeks will be expected in days. Every organization that deals with lots of people will learn on AI to move faster. The firms that feel slow will lose to the ones that don't. This isn't about chasing every shiny tool. It's about not being the one left standing still. Think about your practice. As everything speeds up, are you built to keep pace? Okay, you don't have to master all of this overnight. Pick one idea from the series, try one tool on one task just for 1 week. Because the goal isn't to compete with AI. It's to be the professional who knows how to use it. The accountants who start now will be the one clients trust later.